Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great. What a week, eh?
What a week. We are recording today, March 27th, Friday, March 27th, about an hour after the close. And the theme for the show this week is the regime has changed, just not where everybody was looking for it to change. It's in the markets, and most are taken by surprise. Those that watch our show regularly, our faithful listeners and watchers, are not surprised. And what we're going to do on today's show is we're going to go into, why we feel comfortable making that statement. Importantly, what to expect next. Because Barry, the only way we make money is to position ourselves for what comes next, not what's already happened.
Absolutely. Isn't that the
So
truth?
yeah.
Unfortunately.
So let's jump into it. I mean, there's
Uh-huh.
the S&P looking very waterfallish.
Yes.
And
Yeah,
let's
let's take
uh
a look at it.
let's look at the evidence. Let's tell people, you and I were talking, there's no doubt now that the regime has changed. So what regime are we in, and why do we feel that way? Let's go through the evidence.
Well, it's funny because just last week, wasn't it, that we talked about how the bears are waking up after for the
Yeah.
spring, right?
Yeah, with the flowers and the wild animals, the slumbering bears were waking up. That's
Yeah.
right.
Oh boy, did they wake up.
Yeah.
All right. So let's take a quick review first. We noticed the price coming up into a couple of really important cycle highs once in the early January. So that was back in January 12th. After that, it was this sort of the false break high at January 28th. So by January 28th, it was pretty confirmed if this was going to be a false break and we didn't break through and we reversed, which we did the next bar on the 29th, then there was a very high probability that we're going to have some kind of a correction. So that's where it all started. And if you guys have been watching us for a while, you know the story, how we got through October, November, and we were looking at the potential analog from 2025, and we kept talking about how that kept going sideways and eventually gave out after a false break right here. And so, we were following it very curiously. And as for numbers, 6820 was really important because the fact that, the whole thing there was, the entire time we were sitting above it. You can see the entire, ever since the new year, even since Christmas, we've been above it. And one of the things was, that was the bottom of the range, right? Everybody got used to that. And we kept saying, look, guys, we're making lower lows, we're making lower highs. And if we get stuck below 6820, we're going to have some problems. So that's the story up until we got stuck below, up until we ended up on March 3rd. We got under it. We tried to come up one more time and couldn't. We reversed 1 day reversal, right? 1 day. So that's very weak. Then we came right back to 27.27. I'm sure you guys remember all of that. And then we came right up to the March 9th, right? And by then, look, we're pretty far from 68.20. Our next focus was 67.27. You can see what happened there. We really couldn't. And the last test of that reversal was March 17th. All right. So that's kind of how we were stair stepping through the levels. It was pretty easy. I don't think I think we complained about the sideways, but once it started taking levels and the price action was sort of unfolding, it was okay. I think last week was it? Yeah, last week and the week before we talked about this November. I talked about this November 21st low, not just casually, but it's sort of important low for the entire structure. And the best scenario would have been, we came into the spring cycle that we have a false break here, and somehow we get about 66.38, which is 50% of the square, and try to make a decent correction with 5 days, 7 days, something of that sort. But what happened was, we had the false break on that Friday, right? Then we talked about, go back in last week's tape. It'd be really, I mean, I don't know how many of you guys are really studying and how many are just getting the numbers to trade, which either one is fine. But if you're studying, go back and check the tape. a week before always, because then you can kind of see how we piece it all together. And here we talked about 66.38 being important, and that if we can't get above that, well, we're going to be in a little bit of trouble. Sure enough, Monday we tapped it, couldn't do it. Tuesday, basically down day, and Wednesday we had the lower high from the day we touched the 50%, right? From there on, we just kind of gave it all up. But you can see where we gave it all up. If you look at the November lows, and you look at the November low, and you look at the low here on the 24th, pretty much there, right? Pretty much tapped it one day up. That was sort of the false move, and then whoosh. Now we got the move. So we told you guys about selling rallies, I think, in here. We were looking for the first pullback after the false break, and we had one here, and then we had the second one on February 11th. So ever since that, we even had a couple of thumbnail titles called "Sell the Rallies" or something. But anyway, so we talked about selling the rallies because of these highs that came in January, pretty big ones, and if it's to work out, the price action should show that. We were seeing the price action and then stayed with it, didn't try to fight the price. So you can't fight the tape. So anyway, at least what you want to do is be able to read it. So anyway, we had this sort of a descending triangle kind of a setup. We broke out, and this is the touchback, the kiss back to that line, which is 68.20 around there. And we slipped. All right. So last week I also talked about, hey, this 64.59, 64.60 level is important, quarter of the square. And we're tapping into some structural support back from August. Now, last Friday and Thursday price action, it looked like, okay, we could still do a false break, kind of fake out and then run. And then, of course,
Friday, today they gapped over it.
Yeah, we just
Classic.
gave it all up. And so the thing is, the markers that we have are the way we navigate, right? So first we had 68.20, then we had 67.27, then we had 66.38. Then we just blew right through. We held 2 days above, then we blew right through the 64.59 or 64.60 level. And we pretty much stalled at an 63.70. So the obvious place to go and tap now would be down at 62.80. And if you guys remember, is it 62.75? Yeah, 62.75. And, I talked about this projecting out, and hey, if we break the 50%, which is kind of our rule, we could end up down at 62.75. And then I thought maybe too soon. But you can see how fast it can all go.
That April 1, is the April 1 your full square there in time? It looks like it is. That's
a full square. That's actually, April 1, we're about 360 trading days, 360 days from the April lows from 2025.
Right.
So that's going to be important. So April 1, that area is going to come up a couple of times. So let's see how that works out in time. I'll talk about time in a little bit later, because you can see how time got us on the right side really early. So it's really about matching price and time. So you end up on the right side, trading the direction where it's pushing, and not fighting and battling it every which way. And the way you do that is you have to remember and mark down where the cycles came in. And that's probably why Gann wrote down all those dates on his charts, where things started and all the counts. Anyway, so yeah, we have a 360 coming up, which is kind of a big deal. All right, so for next week, where are we going? Well, we have 62.75, could probably dip a little 62.50. I think that's the critical area to watch. I think it's something like that. And because of the counts coming in, the 90 count from the high, which is a normal correction, and the 360 from low to low, with that 90 count from the high coming in, that April 1st, 2nd, that time window becomes important. So all this time we weren't too worried about it making a low, and the whole thing with, just to be clear, I think you guys got it. The thing with the November lows was that would have been the ideal place to make a false break, right? And then bump. But what we couldn't, I talked about reversing off that Friday side, but we just couldn't get above 66.38. So it just it just didn't pan out. So
That's
when,
one of
when
the, Barry, isn't that one of the signs of a regime change, right? If we were still bullish, it probably would have done a false break there.
absolutely, I mean, failing to follow through on a known sort of a pattern is a big sign. It's a sign that is going the other way, and you better buckle up. So that's kind of what happened here. If that false break was really true, we should have popped and gone. It wouldn't have failed. So it failed actually at 638. Now you can just look at the price action. That's fine, but we are using squares for good reason. As you can see, we got the high, got the low here. They got the initial low and the reversal on the 23rd. So it helps. So now we're looking for some kind of a finish around 62.75 because it is a good cycle count. 3 months, 90 days, a good correction. Now, goes without saying, we have a lot of numbers between 0 and 360. If 90 doesn't hold, obviously this gets pushed out. We can get pushed out to 180. We can get pushed out to 135. So it's going to add to the cycle, which means we're working out a different, bigger cycle than the 90, right? So it would be easy to get this pushed into May. Middle of May would be the next count if you're going to go from low to low, maybe a little earlier. But anyway, let's not count the time too soon. What we're looking for on 62.75 is if it holds, obviously we're looking for some price action. We want to look to reverse, consolidate, or move higher to retest. And God knows we got plenty of stuff to retest now. Obviously 64.60 is a key level to get above. If we get up to 64.60 and we do this kind of a thing and poke a little and sellers step in, and that's just trouble, right? Either we can have another leg. I mean, this, by all accounts, this looks like the third, right? Maybe we can say we had a complex two. If this is the third, so we probably have a simple fourth. We can maybe have an ABC correction, and then possibly the next leg, if you want to count these things.
Right. I mean, not to
Right?
jump the gun on the correction, but half a square would be perfect, right? 50% back.
Yeah, that would be just perfect. So,
Hmm.
and then that happens. So that's the neighborhood where we want to see this. Now, the second part of that is if 62.75 doesn't hold, April 1st or April 2nd, and we somehow slip under for whatever reason, now we got real problems, right? It just means it is going to be extended, even at that point, unless we correct that in a couple of days, and the rally is faltering quarter square, eighth of a square, very small count, maybe 1 or 2 day counter trends. This thing is weak as hell. I mean, here, 1 day counter trend, right? Here, 1 day counter trend because I don't count the inside bars. 1 day counter trend. So, 1 day counter trends all the way. This is super weak. So this is obviously that's what we've been calling it, weak. So if we continue to see that until we can stall and have at least a couple of days, even 2 days, 3 days is not exactly bullish. So we're going to have to kind of go with the flow here and flow and see what happens at these levels. Other than that, we're still going. So we're not trying to catch knives here. So 62.75. If it fails, we talked about this back, a couple of episodes ago, like 6100, 6113. This area is the next structural support. I don't know if it's going to get there next week, but who the hell knows, right? It could. So if we fail at 62.75, it just seems logical we get down to 6100 level. Not just the structural support, but also it's convenient. It's a quarter of a square. We'll run out 1.25 squares, and that would be just fine. So those are the two levels. So 6100, really easy to remember. 62.75. I mean, that could happen in about 10 minutes. So not a big deal, not like in the old days. All right, Ben, not like with these tweets. Oh, we could get things really rolling.
I think you said it right. Buckle up.
Yeah, buckle up. Even for a reversal, even today I thought, with this kind of, we're going down, 3/8. 3/8 is normally a good place for a reversal, so I thought maybe we'll get one off of here, 1 or 2 day reversal and back down. But anyway, that's all. Well, if you guys want to follow us, we talk about this stuff. We post in the morning. We post, Ben, you post all during the day. So Follow us on X. Links are in the description. And if you guys like any of our work, even one part, one segment, please hit the likes because that's the only way to grow the channel and sort of grow the community. And we have some cool people. I think we have great, great people, regulars. So yeah, hit the likes, share, and maybe subscribe to all the things. And if you guys want to follow that, I think it's good because we're doing more stuff. At least I am. Ben's always been pretty thorough, but I haven't been. I just kind of post the basic things. But since last week, waking up with the bears, I started posting a little bit more, keeping track of the fuse lines and showing you guys. And if you guys want, check all that out. I wrote 4 articles on X about the fuse line and how to use that because, fuse lines basically make money every day.
Really has been fantastic.
Yeah, it's been good. And there's a track record. You can check it. All right, let's get back to the S&P here. So that's what we're looking at, right? Max 6,100. 6275 is preferred because it's at a good square level, and we'll see what happens from there. All right, let's take a look at. I think the better view is when you look at all the charts together because it gives you a much better view than just one chart. If you guys wonder why I spend so much time on the S&P, but we look at a couple of different charts because it gives you a lot better sort of situational awareness.
What a chart! Look at that. That's price and time right there.
Absolutely. And nobody can say anything about it because we were actually, I was looking at this high, which was it was a false break somewhere in here, right? This high.
Right. Yep.
And saying, hey, we got the high. And I remember you saying, hey, wouldn't it be funny if we come up and tap that before we drop? And no, sure enough, it did exactly that. And then we started getting the lower highs and the whole sort of the descending triangle pattern just broke through. And you can see this buffer that I drew in a while back saying, we can't really maintain all this kind of momentum that we're bringing up into the high. If you want to maintain that, we had to sort of hold above that. And we started slipping. This is pretty much where we started to slip and not be able to recover, right? Early March. So we stepped into March. Anyway, so what are we doing with this chart? Well, this chart, this is a continuation chart, and it's from the October 22 low. The deal here is we want to see if we can settle above this 64, 65 level. And if we can't really do that, if we straddle here, it's going to get weaker and run lower. And you can see the old highs we talked about match up perfectly with the quarter square here at 61.75 or so. So keep an eye on that. All right, let's take a look at some of the other charts. Here's a calendar day chart, and here we can see that 45 count that we talked about. And you can see the 360 right there and 45 from this high. So that all sort of lines up beginning of April 1st, April 2nd. Here, we're looking at 62.75 continuation chart from the April low. And if we slip through, well, basically 6,100, So keep an eye out for that. That's where we're targeting, right? Now, let's say, we get some kind of a tweet Sunday night or Monday morning and we reverse immediately. Well, obviously our eyes are going to be on the next level above, right? So in this case, it's 66.40. So when you guys are looking at all the charts, remember if we reverse, we can't cover all 5 days in one podcast, but you want to look at, obviously here it'd be 64.60 and the next level. So keep an eye on it like that. It'll make it easier. Here's this is the calendar day, not the calendar, trading day chart from the high.
This is June contract, right?
June contract. And here, what we have is April 1st coming in. So,
wow. You know what's crazy about April 1st, Barry? Remember you and I were talking about this before I posted it. Remember the Miracle on Ice?
Yes.
The 1980 hockey thing and the whole thing. When I was watching the hockey, I said, let me go see if there's a cycle here because this is crazy. It's taken, 47 years for them or how many ever years it is for them to win gold medals. And I found the cycle. And remember, the cycle ends on the 28th, which is Saturday. So, plus or minus a couple days takes us to April 1st.
Absolutely.
And we're spiking down into it, just like the 1980 experience. It's crazy.
Mm-hmm.
It's crazy and fascinating all at the same time to me.
Well, the best part is it's tracking.
Absolutely.
And I
You
haven't
know?
heard anyone else talking about that. You're the only one. Something to keep an eye on, because when
Yeah.
these analogs get too popular, then sort of nothing happens, right?
Right.
Anyway, yeah, this is great. So let's see if that comes in. So if that were to happen, we need to get in there around 63.74, and out, knowing the S&P this front month, we could run a little low, 63.40. But that's the area we're looking at. Let me just drop a little box in here. That's the target box. That's where we want to be. And so what's a big deal? We talk about, you want to be here, you want to be there. It's not like we're trying to buy the low tick. It's just we want to confirm a new trend as soon as possible. All right. That's the whole point of all this work that we're doing, is to point the new trend as soon as possible. And that's what we're doing up here. The fact that we were looking for it before we even got there, and then for it to come in and then to confirm it. So it just, within a couple of days of a high to say, hey, we have a potential here. Let's look for the price action. And then the price action, what happens? It follows through. Then you have it, right? That's the whole point of technical analysis. You want to see how it unfolds. And now, if it comes into a low, well, we know April 1st, that area is something we want to keep an eye on. It's the target box. And if we reverse, well, we all know what kind of price action we want to see in a reversal. And so we'll follow through on that, and we'll start trading the other side. So that's just how that works. Now, we'll try trading the other side as soon as we know that the new trend started. So the idea is that it's not the first bar down. We want to have confirmation, right? So the confirmation would be some type of a price action. Obviously, 30-minute, 4-minute, it might be earlier, but you really want to wait for the daily like we did here. So for the show,
And the key, right? The key thing too, Barry, you and I always talk about at these key levels of price and these key times, you also have to watch to see if you blow through it. Because a lot like we talk about with the ABCD, if you blow through an ABCD, it's going to go in the same direction.
yeah,
It's going to keep going. And the same
yeah.
thing here. If we blow through these levels and this time period, it's got a lot more to go. Thankfully, we don't have to guess. We know the level to watch.
Mm-hmm. Yeah, that definitely goes without saying. You really want to watch that, because if we don't get the reversal here, then we might go out to 90, not another 90, different count, of course, but everything gets stretched out. It's kind of how it works. All right, let's take a look at the NASDAQ. Take a good look at it, because this was a beautiful thing in working. And I don't want to go through how we got the high and all of that, because you guys have heard it. The last thing is 90, high to high 90, and we had a low to 72 degrees, low to high. And then we were watching this 25, 140, right? Forever we were talking about this, because, if you can hold above, it's great, blah, blah, blah. If we can't hold above, not so great. And finally, in February, we started to crack, came back up a recovery here, late February 25th, 26th. And once that failed, that was it, End of February, basically, we slipped under. And I drew this, I can't remember when I drew this triangle in. So basically, ascending triangle, if it fails, it's bad news. That's another thing. It's one thing to break out, retest, and run. It's another thing to, well, here again, we had kind of a ascending triangle, little one, let's say, breakout failure, drop, right? And another triangle, and here we didn't even try, we just failed altogether. So once that happened, it happened exactly at the 25, 140 level. And we started to slip. And remember, we were just joking about this, how you can just, hold it on by the fingernails until it just sort of gave it up. The level below, same story, right? We were looking at, in the S&P, we were looking at the November 21st low. See if that's the last chance to make a false break. Well, we did one. We had a break, but it wasn't false, because we really couldn't rally off of it. We had inside bars. I mean, the big tell here was inside, and this whole rule about selling the inside day breakout paid off really well here. As you can see, once it broke, it was all just straight down, no heat. So that was really good. And that happened basically at the bottom of the other stack that's on top, right? So this is the ceiling. All that is ceiling now. Talk about work to do. A lot of work to do. All right, so 23,700 was a preferred level. If we can stop here, I mean, if we push through for a false break, we can get up to 23,700, and then bounce, okay, fine, we can still call it a false break, but it didn't, right? When the cycle comes in and the price fails it or tries kind of, tries to do it and fails, this is pretty lethal. So, and that's what we're seeing now. So the counts are the same, you guys, so you can watch those. So what's the ideal place? Well, I see I have 23.30 here. That would be one. But I think if you guys want a major level, I think 22,274 has to be the one, right? So let's see. Let's keep an eye on that. That's a major level for the daily. And the other part, the other side of the coin is we want to see if we can clear 23,700 to the upside. If we're stuck below that now, that's troublesome, right? So let's see. And I see the 23.30 is also touching these lows and these highs. So it's kind of an important level. So it's possible that we stall out here somewhere before we pull out. So watch that. Let's take a look at the Dow. Dow looks like I did some work. So we failed at 47,162. Remember, that was our old support level. The idea earlier was to be able to hold above 49,484. Now what happened there? Broke the triangle. Now here's our last false move, the upside. Reverse, and that was it. Came down to 47,162. And if that goes, 4,600 was the next level. We could, minor support there. But the big one that we've been looking at with everybody else are these highs from November, December, January of 25. So January 25, November, December 24. So that lines up with around 44,873, 44,850. That's where ideally where we should be holding it. So you heard it here first, because we have good structural support, just enough dipping into the structure. Everything be peachy if we can go there. But let's say everybody panics and we go for a panic low. Well, then we have a little. It's like those, when you're coming down the hill, the big roads that go down. When the semis lose their brakes, it's like a fan pit. So that would be this, and that's between 43,723 and 44,700, and the end of the sand pit would be like 43,700. So that's kind of where we're looking for this to go price wise when we line up in time with that April 2nd possibility. All right. Anything you want to add to that, Ben?
Those are good levels. And if it really gets frisky, it's going to go down to that full square.
Yeah. If we really want to, get the panic done and over with, instead of this slow drizzle, we can go there in a hurry. But those are the two levels, you guys. You guys have it. That's that. Let's take a quick look at the weeklies. Now I can start speeding it up. This is the cash weekly. We obviously talked about this last week, saying we got enough of a false break, but we have to stay above. We have to stay above the 50% level, which is 65.22, and obviously we couldn't. And if you notice how, the high of this week was exactly, you can say 5/8 or 3/8 right there level, which is classic, for resistance. And then we lost the 50% level, and here we are. So now weekly, we don't all have to turn and go, because even if we get a 7-day counter trend, that's only one bar up. So I'm not too concerned about looking for support here. But what I told you guys last week was, if you break through 65.22, there isn't a whole lot in between till we get down to 6,100, 61, 65, 60, 50. It's really in this band where we're going to start finding some decent structural support. So weekly, I don't think we're quite done. And weekly now to flip around, my experience is we can't be straddling this. We really need to clear this and be squarely above it for us to really get going to the upside again. So that's going to be a while. In the meantime, you guys know what the levels are.
The other thing
So
about the weekly is it's just the first thrust.
yeah, absolutely. Yep, yep. Unless that was a 1 and a 2, a little 2 here. That could be a 3.
It's
Or
possible.
or or this is the first. So hang on to your
Yes.
hats, if
Yep.
that's the case.
Yep.
Yeah, we'll see. We'll see. We're not big wave counters, but we count enough to we count the profitable part, which is the third. So when you want
Yep.
to try to catch that.
That's what my eyes are looking at, possible
Mhm.
third after a counter trend.
And that brings us to the weekly continuation chart. I remember to circle you guys. And boy, then when I saw this, I just knew this was the one. And so far it hasn't been the one.
Yeah.
6,400. The only problem is I can't remember how I got that level because there was probably, I got to look at this chart again. But anyway, we stopped pretty close enough to it, a couple of points from 6,400. So, but anyway, I think, and I also have a buffer level drawn up here. So we're right into that, but I can't talk about that because that's from another chart. I think I duplicated this and ran the squares.
Whatever, it's a great level. Look at where the low
Yeah,
today is.
whatever it is, it
Right.
held. So, but look, for next week, we have 62, 70, 67, 75 is really the 90. I mean, that's a kind of a big deal. It's coming off the low in 25. And that would be a normal level, it's possible, or anytime we're above that. But the bigger deal now is the 66, 35, 63, 60, 40 level, on counter trends, can we get above those? So I think we got plenty of time to talk about that stuff.
Hey, correct that 90. It says 67.75. I think you want 62.75, right?
Yes.
Your
Yeah.
number there.
Thanks.
Hmm.
62.75. Yep. So there's 62.75. And we could, keep an eye on that 61.70 area, maybe a little around there because that's structural support. Keep an eye on both. And let's take a look at the 30-minute before we move on. 30-minute, as crazy as the week was, actually 30-minute did really well. And like I said, if you guys want to follow this, catch us on X. And I post this every morning, and Ben posts all day, all the different things he covers. Anyway, I think we left off at 65.32, which was pretty good area for support. And we reversed. We got that little headline rally, 67.20 stalled out. So a couple of areas that were important numbers. If you guys have been watching this for a while, at least after we flipped below 67.20, we had 66.76 and 66.20. Those were important levels this week. And you can see we stalled out at 66.76. Then eventually we got under 66.20 right there. And from there, once the something interesting, we had this count. I put it on here. This low to low was 90, and that should have given us a little bit more of a bounce than that. So the fact that we got stalled here, that's really a sign of weakness. And once we took that low out, after you have a count and then you blow through it, kind of like the ABCD that Ben was talking about, what happens is that it's kind of like somebody pulling the plug. So somebody pulled the plug here. We dropped one counter trend, which tested those old lows, the two lows, and from there we were just down 65.32. We hung around there for a little bit, but really couldn't do it. That was it. It was just sell, sell, sell. And the next level down went 64.50. Held there for a couple of hours. Then we slipped through that. Next level I have is 63.60. So for next week, if you can get about 64.50, okay, great. Maybe we can see if we can go up and test 65.30 and do what distance we have to do there. But if we can't get above 64.50, then we get to 63.60. If we fail that, we have 62.70. Failing that, to give you guys some extra, we have 61.80. So these are the kind of levels. We got 62 in here, if that matters. Anyway, those are the key levels to watch. So and for the upside, we got to deal with this first and this second. So if we get up there, we can hold at 64.50. We'll probably be testing these levels. If we can't get above this, then we're probably going to be testing the lows. So that's the That's a 60-minute. That's the round up for the indices. What do you say we move on to bonds, man?
Moving like crazy.
Yeah, bonds are doing pretty good. Kind of according to plan. We were kind of looking for that once we lost the 116.14, 116.5 level. 119.16 held. So once we lost that, we were looking for lower prices, and here we are. Next
Target,
big,
yep.
all right. So the next big support level is 110.23. We can get there. Now you know it's not a strange number because we held it here back in May, and before that we held it there in January of all places. So you don't want to see these getting taken out too soon. If these get taken out, we're having some major problems somewhere. I guarantee it. So watch this level, and it's a very important level, 110.23. See what happens. Now also we have overhead, so we have resistance starting about 114.5 or so. All right, that's for bonds. Let me do bonds and crude, cover the weekly, and I'll just do it in groups. And here's the crude chart. Very good chart, true to form. You guys were talking for months and months and months about how this kind of a pattern, not that we knew what was going to happen, but this kind of a pattern will result in a big move. I remember saying within the next 3 months or 6 months or something, and we're in the bracket because in June that would have been run out. So we got the break. The telltale signs were 61.61, the fact that we were holding it, and then 64.75. You guys watch us all the time. This was the key test, right? And from there, it was up and away. From last week, I talked about, long as we're above 79.50 or 83, this zone here, market's just, it's basically primed. It can run up anytime. And closer to the upper part of the square, which is 95. It's really 91. If we're above 91, it's even more primed. And above 97, obviously we're going to take out, we're just sort of gearing up to hit 110. So that's kind of how it's looking. And all this business we're doing here, all it's doing is putting in a nice floor. Once we get above, then the pullbacks are going to be holding at 97. That's what could happen in the long run. Not because I say it, but that's how markets behave. So this area can end up becoming good support now that we've been held there for a while. So pretty good. Let's see what happens. And once this little triangle, we drew this triangle out last week, but this week, same triangle, right? We have a similar triangle, just a little bigger. There we go. So watch that and let the square be sort of the midpoint, which is 95. So you can say 95 is a midpoint, a little bit more bullish above 97, a little bit more bearish below 91. I would use it like that, like a bull bear line. Before we get to gold, let me go finish up the weekly. Here's our weekly crude for months and months. We were joking about this low and how eventually we're going to get a break. Well, we got the break. Now, really, we're basically above the 50%. Yeah, we're straddling it, but it's a big chart. So here, remember the other chart, it was 95. Here is 96.84, $1.50 or so. It's close enough. So the next level is really 126, 127 is the next level. And if we break through that, we have 157. And above that, we have 187, which is a really good number. It's 180, 180 degrees up, $187. So that's the potential. I think as far as directionality goes, we want to see it holding above 96.84 for the weekly trend to be, let's just say, bullish. But
I'm going to show something on the monthly chart that'll support your 180.
Oh, okay, great. And the other thing I was going to say was the 3/8 is also going to be pretty important. So long as we're really above, 90, 91. Remember, it's 8. See here, it's 89.38. So 90, 91 was the level we had on the daily, right? 91. Here is 89, and here is a 3/8 level on the weekly. So this area is really good support. If we can net hold above that and hold above the 50%, then that kind of opens up the, on the way to 126, so forth and so on. Yeah, let me go do the metals. Gold having Now I would say it had a good correction. That should do it. That would be very bullish and got everybody in a little bit of a panic, but not too much. Now it's still very bullish all the way up to 34, 82, this up here, that area. But holding about 4,200 is very good. So we talked about that last week. We spiked there, held. Now the key is it's 45.66. If we can jump over it, then establish up here, we could probably move higher. I promised you guys that I would do some work about where to catch the relief, the corrective low. I'll do it next week. Okay.
Well, Gartley that completed there.
We have a Gartley. Yes, we do. Okay. Okay.
So,
but I wanted to see, I think we have some cycle counts too, but I want to just make sure. I'll do it next week.
yeah, we'll check it out.
But anyway, watch this 43.86. I think that's a level to watch. Its bracket is really 43.86 and 45.66. Above the bracket is more bullish. Below the bracket a little bit more bearish. We're good till 4,200. I doubt it should get lower, but if it does, you see the levels. It's just a matter of waiting for it to sort of finish up the correction. But metals are good. I don't think we're ever going back to the days, when silver is $40. So, all right. So silver, we talked about a couple of three levels. We talked about 90, we talked about 81, and we talked about 72. And last week we managed to hold below 72 for most of the week, 80% of the week. Now silver is a little bit weak. We need to get above 72. Until we get above 72, I would consider silver to be in a weak position. At the same time, we came down to the 50% level, which was a 62, let's say 62.50. Long as we can hold above 62.50, I feel like the correction price-wise might be finished. That's a good level to finish. I just got to check the timing on that because I wasn't able to focus on metals this week. Everything else happening. Now we did have a low. ABCD was one of the targets of 511. We have good support at 518. So that area would be good support. We got close. We got down to 5.25. So that possibility. But I'm not sure if copper's finished up yet because we kind of ran up and stalled and we reversed. So if the reversal gets below 541, looks like we're going to go back and check the lows. But let's see. It's kind of hard to believe copper is behaving this way with all the probably need for metal, all over the place. But let's just go with the charts and see what happens. Gold weekly chart held 41.31, and we got above this 43.34 level. So I think it's 43.34. 43.91 level, and this is 41.82. There's other numbers from another square, so don't mind that for now. So I would say, pretty much like in the daily, we have to sort of finish this up. I gotta check the cycles, but for now, let's see if we can net next week hold above 43.91. Watch the daily price action, and we'll come back and visit this. We had a big range this week, so it's possible that we put in a inside week next week, which would give us a little bit of time to figure things out. Silver also came down. We took out the 65, 66 level here and recovered. So we're basically between, the quarter and a half. The correction was 3.8. You guys see how common that is? 1, 2, 3. Right? I feel like the corrections might be done price wise. Time wise, I have to check. We might come back and mess around here a little bit, but now it's still in corrective mode, right? So we're waiting for it to finish up. Copper 535 is our level. We closed at 546. Once we can settle above that, I think we're going to have a pretty good weekly trend going. Momentum's still good. We're holding higher highs and higher lows. So let's keep an eye on that. But the correction was solid. We did a little bit more than a square during the correction. So metals in corrective mode. Bitcoin, kind of a funny fence pattern here, but all right. Perfectly natural and normal, it seems like. So anyway, 68, 580 was the level we were watching. We really had to hold above that if we're going to go up and even challenge any of these levels up here. But we said last week how the high on March 16th, checked on the April low, and we couldn't even get above that. But the basic thing was we had to hold above 68,580. We couldn't. We slipped through, and looks like today we took out the trend line. I said, at least hold the level, so we didn't, and now we're pushing lower. So let's see where we go. But we have a couple of levels in mind. We have 56,886, and I know we have the ABCD, which would be amazing, 5,200, and I know Ben, you have 54 or something. So it looks like we could have new lows. This is obviously not completely finished. So we'll keep an eye on that, but watch the 68,580. If it's not above that, it's still in trouble. Still weak. Here's something that isn't in trouble. The dollar's doing great. Here's my trend line. We're holding the trend, correcting nicely and moving higher, 99.50. Next one is 101.70, is it? This full square is 101.10. So that's the next target. If we get there, if we can get above that right away and hold above 100.5, dollars in great shape. But for now, it looks like we're fully on the way. See, we had that 45 by 36 by 36. We cleared that, so I think we're doing okay. Next, we have the euro. Last week, I talked about selling the 50% of the square, which was 1646, and we tapped it and we sold off. I don't have a whole lot to add to that other than, well, stay short or trade the short side. We have 13,504 is the next big support level.
It's weak.
And well, that would be something, wouldn't it? It's coming. It's coming. It's just a matter of waiting. So be patient and hold the trades. What else do we have here? Let's take a look at the weeklies. Here's the dollar. Great story. I mean, we covered all this. We caught these lows and everything in between. So, the last couple of weeks have been these 97.83 to 98 level. This buffer, we had to clear it. You can see we sat there for almost a month, right? And then we punched through. And once we punched through it, you can see how cool is that, right? A whole month sitting right under it, then punched through, and then we're off to the races. We had a little triangle here, so let's see how that breaks. Overall, we're looking pretty good. I think the lows are in, although this could be an expanding triangle, which it could be. But for now, we had a 1 week correction and now back on up. I'd say just for next week, based on the week, as long as we can hold about 99.50, it's in pretty good shape. Euro is looking great. 1654 was that 50% level and resistance. So we rolled off of it. Basically, we got to take out last week before last low. So I would say the support level is at 1418. If we take that out, it opens up. Remember this, the old 109, 1095 level, which we were battling with for almost a couple of years.
Sure looks like it's headed there.
Yeah, it is headed there. And all right, so this equal move actually got it. That was great. So geometry's working just fine. What else we got? Are you covering natural gas? Not much to talk about with all this news. Natural gas plants blowing up, but we're just like cool as cool as an ice cube.
Yeah, not here. We in the U.S. we got a lot of natural gas.
We got plenty of gas, no problem.
Mm-hmm.
Anyway, what we got to watch is the fact that we've been going sideways for so long. It's easy. This is how we move out into kind of a bull market. So watch it closely. This is all kind of backing and filling kind of price action. So it's there. Hang Seng also had a correction. This 2486 was a good support. We held right above it. Moved higher, low. So maybe they're done with it. We'll see. But that's where the key levels are. But overall, in a weaker position because we're below 26 to 30. That's it. Let's see what happens next week. Hope you guys get onto X and catch our daily post. In the meantime, let me put it back to Ben.
That was good coverage and a lot to cover.
Yeah, it's a lot to cover, but lots happening, right? I mean, my God.
Well, when a regime changes, a lot happens, and that's what we're seeing.
That's true. And the funny thing is, everything is moving. The grains are moving, the bonds are moving, the metals are moving. So we got a busy year.
Very busy year. So let's jump right into it. I got a lot to go over with you guys on the commodity side. First, let's quickly breeze through the NQs. I post every day on the NQs so you can see sort of the thoughts. And today the post was, look, if we give up this 24 to 24.2 to 23.9 area, we're going to get aggressive selling. Well, that's what happened.
Exactly what happened.
Yep, this was really important support. Yesterday we probed it. Today the high was right into it and then bang, closed at the lows. I mean, we're heading to 22,820. I mean, that's where we're going, right?
Yeah, yeah.
And
Looks like it.
the time counts basically got the high, and I posted these, been posting these for a while, and we were talking about those when they came in. So it now we can say, okay, that was a significant high. And because we're getting this kind of reaction off of it. Let's quickly run through the weekly and the monthly, and you can see why that area was so important.
Look at that.
Yeah, this is 23.9. It was structural support. It was tested here multiple times last few weeks, and we punched right through it. So again, this is another marker saying odds favor we're going to 22,000. Right.
Yep.
We're
Yep.
going to push down. We got good support here. It's a full square. So that sort of looks like where we're heading. Maybe not in a straight line, but that's where we're heading, right? As long as we're below this,
Mhm.
24,000 area, the pressure is
Right.
going to be down there. Let's look at the monthly. Again, why is that 24,000 important? Well, it's 180 up from the .com lows. It's big. It's a
Yeah.
big level. And today we just sliced right through it. Now, we're not going to have a full monthly bar below there, obviously, but this is the first thing that happens, right? If we close down in here on Monday, chances are we're going to have really high odds that we might print a full bar under it because this is going to be significant resistance. Not only is it a
Right.
full square, it's the lows here in November. So structurally, that's going to be resistance. So 24,000 is the key here. Knowing where we closed and what, technical damage was done today, 22,000 is the likely next important target to the downside. Anything you want to add looking at the weekly, monthly?
No, that's a great chart. So yeah, let's watch those levels.
Yeah, let's watch it. All right, let's jump over to Bitcoin. And you can see Barry was telling you about, the targets we have in the 50. Not only do we have the ABCD, but we've got the half square at 50,435. Here's this formation is ominous, right? Because it looked like we broke out. We came right back in. Then we really broke out and said, oh, we're just testing the breakout. And now
Yeah.
we sliced through it.
Yeah. And that was a false break up above.
This was a false break. So we were talking about we had to clear 73,561. We couldn't do it. So now it's going to go back and test, 61,972 and the lows we made in February. And we'll have to see if they hold. If we get stuck under this level, then it's down to 50,000 and we complete the ABCD. So we'll watch that. Let's look at the weekly. Your key level on the weekly is 70,600. You can see this is a perfect example of structure, right? You come down it through what was previously support, and now it becomes resistance, right? On these tests, these weeks, we tested it. 3-4 weeks, we tested this
Yeah.
thing.
Yeah.
5-6 weeks, and now we're pushing down again. So as long as we're below 70,646, we're heading to 52.
I think those bears woke up even in
Yeah.
Bitcoin.
Yeah, that even in Bitcoin. Yep. Quickly, we'll take a look at the monthly. Well, the monthly, the key number, just very similar to the weekly, we got to get above 74,000. Otherwise, 56 is where the pressure will be. So we're going to see again, do we get a full bar below? Because we saw what happened when we get a full bar below here. Pretty sharp moves. So that's it for Bitcoin. Anything else you have on Bitcoin, Barry, or want to add to Bitcoin?
No, we're good.
All right, let's go to the grains. The grains are correcting a little bit, but the thing I want to quickly show you, look at the correction we're getting. It's
Very
pretty
nice.
much sideways, right? It's
Yep.
more of a time correction than price. Structure's good. The lows here are sitting on the highs here. So we're just waiting for the move that's going to be. If you don't have a position, this is not a bad spot to add a position because you can really measure your risk. You want to make sure, we stay on top of this structure here. This is a very bullish correction. Let's look at the weekly. You can see why we're having a little trouble at the highs. We even got a pullback this week, Barry. So this was a weekly down bar. So a 1 week pullback, and we closed near the highs. If we reverse next week, it'll show you the real strength here.
Right. I mean, this
'Cause
looks
look,
textbook so far, everything.
I mean, look, all these were up bars, right? With a couple inside bars. There were no down bars in this whole move. And now we got one little down bar, closed near the high. Watch for a reversal next week. That'll mean it's ready to go again.
Right.
Let's take a look at the monthly basis. What we want to see next week is we want to see a close on the 31st over 595. That gives us an opportunity to print a full bar above this full square level, which would be on top of all this, on top of all this, on top of this. Be pretty significant. I also did this thing likes to do 45s and 90. I said if we go off the low, this bull market could last into 2029.
That could be easily.
I mean, you can see here's a move: 45 low to
Hmm.
high, 90 low to high, 45 high to low. It likes those 45 high to low. So that's something to keep in mind. Anything to add on wheat?
No, it's just great to see how, it's amazing how much advance notice you have before the move starts, months and months and a couple of years even
Yeah.
before he
Yep.
picks up speed. So,
When you look at these bigger picture charts, it really shows you, how the big moves go. Okay, let's take a look at corn. Another case of a correction that's basically going sideways, right? We're chopping around here, a little bit of an ascending triangle. So if we break here, it should give us a nice, powerful move higher. Nothing bearish about this. Look at where the lows are coming in on top of the full square and on top of these highs over here. So everything is copacetic with corn, just chopping around, getting people to not pay attention to it before it makes the next move. You know how that goes.
mhm.
Here's your weekly. Here, we haven't even been able to generate a down bar. We have an inside bar and another inside bar. But you can see the next leg, the challenge will be here up at the half square at 517. But again, everything looks good on this chart. No issues. Monthly, the key level is 463. We closed at 462. We want to see Monday if we can get a close over 463. Again, it gives us an opportunity to print a full square bar, a full bar above the full square, a monthly bar above 463, which would sit on top of this, sit on top of all this, all this. It's a pretty key spot monthly basis. So watch that and let's see. If it doesn't, it's not the end of the world. It just means, we're going to have to wait another month for that to potentially happen. But let's see. Anything you want to add on corn?
Everything's moving according to
Mm,
plan.
Yep. Here's beans. Beans is having a little more of a pullback. And when I was looking at this, I said, wow, this was a false break up here. We lost the full square. So we got to watch beans here to make sure, we can hold good structure, which so far we are. We're staying above, all this down here where we were looking, where we had the breakout. But we don't want to see it go below 1125. So this coming week, if we see some more weakness, watch that 1125. If it's 1120, if it starts clearing 1125, getting stuck under it, there could be some short-term concern there.
Look, it's a perfect retest.
Yeah, it is.
Let it.
It's retesting right now. Yep. So let's watch and see what happens with that. Let's look at the weekly. Weekly, we had a down bar and an inside bar. Again, the key level on the weekly is we want to see us, get above and stay above this 1171. Once we do that, then it's going to be the next push higher. So, I mean, you can see the grains are all correcting and they correct in a different way, but they're all sort of digesting the move they've made so far. There's your monthly. Again, nothing negative about the chart. We just have to let it mature, let it go through the correction, and then, we'll jump on it or be in it, holding it, when it makes the next big move, because that's what's coming up on these things. That's all I got on beans. Anything you want to add on beans?
Now we're good. We're good to go.
Okay. Next one, let's go to had a very good week is sugar. What's sugar doing? Well, we've been monitoring this thing since we made a low, a high, and a higher low, and then we got the higher high, and we said, okay, let's get on top of this. The next thing was, can we capture 1512? We did it. Look at this one down bar, Barry, that tested the breakout, and then we went again. That's kind of bull market behavior.
Yeah. Yeah.
So the next thing to look for if we keep pushing is 1675 because you can see that that was an area where highs came in and we've got a half square there. But this is just acting really, really well.
Wow. Look at that.
Here's your weekly.
Remember you called it out 2 weeks ago, right?
Yeah.
When it was just breaking the trend
When
line.
when we broke that trend line, I said that's pretty significant. We held the full square. Now we're up to 50% of the square. So 1601, call it 16, is really important. Over the next few weeks, if we can get above and then stay on top, all this is underneath for support now. But the chart, it's maturing and it's moving from the 4 hour to the daily to the weekly, and then the monthly is the last to come along to get bullish. And looky there, 1599 is a pretty key level monthly basis, isn't it?
Sure is. With
So
the trend
next
line
month,
thrown in for good
right?
measure.
Next month, if we start printing in this area and can sit on top, we'll have broken the trend line and sat on top of a full square. So sugar is looking very bullish, doing what it needs to do to progress and move forward. All right, let's go to the next one. Another soft. Look at what cotton did this week, Barry.
Amazing. Amazing.
Beautiful, huh?
Beautiful.
Remember this
Perfect
completed,
retest. Perfect
yeah,
retest.
this completed an ABCD up here, right? And I said, okay, we're going to get a little bit of correction. We want to see how it goes and if we get a good reaction. Pulled back, tested the breakout, cleared the full square today, a half square today, and we're pushing higher.
That's what we want to see.
Just textbook bullish behavior.
Pull up your stops.
Yeah, yeah, right. Let's look at the weekly. Look at what the weekly did too. 2 weeks in a row, we're above this half square. So we're clearing this structure here. And now we're ready to push higher.
Yeah, when you said regime change, you weren't kidding. Everything is moving.
It's moving, man.
Yeah.
It really is. Really is. You can see it in the charts. Here's your monthly. So do we do a sugar here, right? This is the first month we've cleared and we're getting a big move. Let's see next month, do we get a follow on? I mean, everything's pointing to higher prices in cotton. Why? I have no idea, but it's pointing to higher prices in
Man, these
cotton.
higher prices in everything.
Yeah,
Everything.
yeah, that is true. It's very true. All right, let's go to the next one. It's our good friend that we've been trading and talking about for a while, coffee.
Yay.
Let's see what coffee did this week. So this week we had a nice move higher to break out, and look at what we did today. Came back to test this breakout. So this is a really important spot in my opinion.
Absolutely.
This 300 area. If we can reverse off there next week and make a higher high, this thing's going to be doing this sort of thing. If we break back into this thing, then it's not ready. It's not ready to go. So let's watch that next week. Really important spot. Here's your weekly. You can see weekly, this is another week where we pushed above and we're still fighting at this 305 level. So next week, it's really important that we clear 305, hold 301, 300 area and move higher. If not, we're just not ready, which is why you take profits on spikes on these things.
Absolutely.
And here's your monthly. Your monthly, we're still inside. You can see it hasn't filtered into the monthly yet. Just watch your daily. Stay really focused on that 300 level, 300, 301. The lows here today are really important. So we want to see it firm up and then push higher on coffee. All right. Lastly, let's go to our friend crude oil, and I'll show you what I was telling Barry about the watch. If we just do an equal move from the COVID lows to the highs in 22, and we do an equal move off of this low, the target is around 179.
Wow. You weren't kidding.
No, which supports exactly the area of your number you were
That
talking
big
about, which
target.
was
Yep.
180.
Yeah. Yeah.
So if it comes to pass, we'll know. When we watch the levels, Barry did a good job. Listen, it's exciting times. Stay focused on the levels. Stay away from the headlines and the news because it's just gonna screw you up. And most importantly, rest up this weekend because it's going to be another busy week. Great job, Barry. Take care, everybody, and we'll talk to you next week.
Great job, Ben. You guys, thanks for the comments. Thanks for the likes. And yeah, I would say best thing is get a good weekend of rest, and we'll see you next week. Take care.
Take care, everybody.
Bye-bye.
Bye.